Hi guys, this is Nate Lining, CPA at Coles Rhinestein here in Boise, Idaho. So one of the common questions we get from our clients this time of year is whether or not their children have to file a tax return. Well, there are two things to look at here. You have to look at earned income as well as unearned income. Earned income is exactly what it sounds like. It's income that the child has earned. Could show up on a W-2 or a miscellaneous 1099. Whereas unearned income would be any kind of passive investment income. It could be interest, dividends, or capital gains. The threshold for filing a tax return for a child with earned income is the current year's standard deduction. This year, that's $6,350. The filing threshold for a child with unearned income is $1,050. Now, if a child has both earned and unearned income, it's a little more complicated. I actually just had this situation the other day where a client's daughter had a W-2 and also had a brokerage account. The rule in this case would be if the earned income is greater than $1,050 and the unearned income is greater than $350, then the child would be required to file. Now, in this case, the child didn't reach that threshold, so they didn't actually have to file, but we went ahead and filed anyway because there was a refund that she was able to get back. So just because the child is not required to file doesn't mean that it isn't beneficial. If they had withholding, you may still want to go ahead and file the return so that they can get that back. So if you don't understand or if you have more questions, feel free to contact me. I'll put my info under the video. And I hope that helps give some clarity. All of this is going to change in 2018, but for this year, you need to look at the unearned income as well as the earned income. Look at those thresholds, and that will tell you whether or not your child needs to file a return.